Hello, everyone. Let's have a quick look at the agenda for today. So we're basically focusing on the banking module within SAP Business One, and specifically around the setup, processing of payments, incoming and outgoing, looking at the depositing process, working with the payment wizard, and then finally looking at how you can use checks within Business One. At the end, we'll have some time for Q&A. Note that we're not covering the bank reconciliation process in the session today because we've got a separate session we've done a while back, or maybe a few months ago, where we covered it in a lot more detail. And that webinar is available on our YouTube channel, so you can always go back there and have a look at that. But our focus today is on the rest of the banking module. So let's get right into it. So the first thing we're going to look at is the setup aspects of the banking, which can be found under administration, setup, and if you go into banking, there's a few things that you do need to set up front. So the first thing is, of course, you need to define the various banks that you work with. And by default, when you install the system and you have certain localization, Australia or New Zealand or Singapore, the sort of standard banks that are available in those countries would be loaded. But if you start working with someone that's not in there, then or a bank that's not in the list, you just have to come into this section here and add that particular bank into the list of banks. So once you've done that, then you need to define what we call the house banks. The house bank is basically the actual bank account. You might have several bank accounts with different banks, and so the house bank account is where you define those. And so in terms of Australia, you'd have the bank code, in this case NAB, then you have a BSB code which goes into the branch. A note for Australia, at least, you need to have a hyphen separation between the 6 digits. So right in the middle, you need to have a hyphen. Then you have the account code. And then if you are using checks, then at the initial startup, then you have to define what the next check number is. If you're not using checks, then it doesn't matter. You have your GL account. So this is the related GL account in your chart of account structure. So that one's pointing to my bank account number 2. And then you can put some other details in, address and such. But also important one to note here is the GL interim account. This is used if you're doing if you're using the payment wizard and you don't want the initial payment once you finalize the payment wizard to go into your main bank or get taken out of your main bank account. If you wanted it to go into an interim account, so that once you've processed the payment, uploaded the bank file, and the bank starts showing that balance or that transaction or those transactions, then you can transfer the balance from the interim account into your main bank account. So if you wanted to do that 2-step process, then the GL interim account is required. Another couple of things that are important. These are this user number 1 and user number 2. Certainly for Australia, and if you're going to generate ABA files, then you need to have these 2 things populated when you set up your bank account, and then in other countries they would have different settings. For New Zealand and for Singapore, there isn't a standard file format, so it depends bank by bank what the requirements would be, and generally we would have to sort of do a mapping for those. Then the next setup is the credit card setup. So here is where you define your different types of cards that you work with or accept in terms of the payments or even for outgoing. And then in there, you also define the clearing accounts that are linked. So when you receive payment, let's say via a MasterCard, then maybe it needs to go to a separate clearing account. So in my case, I've got a MasterCard settlement account that that balance goes into. And then when you do the deposit, that money comes out of the settlement account and goes into your bank account. And likewise, you have that for the other bank accounts. And then what you also need is a couple of other settings. You also need to have a credit card payment that just sort of defines when the money sort of hits your bank. You know, generally these days it's all electronic, so it would be immediate. But if you had, you know, the old school way of sort of swiping a card and then sending the vouchers to the credit card company, then you might have some other criteria. But that's sort of almost not a common thing. And then you have the payment methods again. This is just a single setup, unless you've got different sort of timings on payments receipts for credit cards. So once you've done that setup, then let's have a look at some of the master data that's relevant to this. So on the customers as well as on the suppliers, you need to define the bank account details. So let's go into one of my suppliers, and in here you'll see in the payment terms section, you've got the bank account. So this is the bank account that's related to this particular customer. And you've got to define that if you want to use the payment visit to make the payment. You also have the payment terms, and this is quite important where you've got early payment discounts. So if you are receiving early payment discounts or you give early payment discounts to customers or suppliers, then let's just have a look at this one here. So you'll see in the payment term setup, you've got this cash discount. And if we go and look at that, you can see that if you pay the invoice within 10 days, there is a 2% discount, right? Otherwise, the standard terms are, in this case, 30 days. So you got to, you know, if you are using early payment discounts, then you'd have to set that up in the payment terms. Otherwise, it's not, you know, so important. Apart from just a standard payment term. Then you've got your payment run and the bank account from which you pay this customer or this supplier, right? That's important, as well as the payment method. So these two things need to align in terms of the bank account details. Otherwise, you know, the bank, the payment run will not, you know, work so well, and you'll get some errors when you try to process the payment. So these are important things. You need to make sure that the house bank account that you've linked to the business partner and the payment method bank account are aligned. Okay, so once you've done that, the last thing here is payment blocks. So if for whatever reason you do not, you know, wish to pay this supplier at all, you've got some sort of a dispute, or, you know, whatever the reason may be, and you can maintain a list of reasons you want to block payments to this particular supplier, then you turn on a payment block. Now, this payment block is applicable when you run the payment visit. You know, when you're doing a payment just by manually doing an outgoing payment to a supplier, this setting is not considered at all. However, if you're doing a payment visit run, then this supplier will not even come up because they're on a payment hold. Okay, and then finally, if you do want to put a AP invoice on hold, so if you don't want to pay that AP invoice at all because of some dispute, you can certainly go into the individual AP invoice, go into the accounting tab, and within that you can make a payment block as well. So that's for a specific invoice. Okay, let's then now look at the processing of transactions. So the first one is the incoming payment under banking, incoming payment, and then incoming payment. So you get, the payment screen up. You can go pick a customer, and once you pick the customer, it will list all the invoices that are still to be paid, or there may be credits as well, or unallocated payments. All of those things will list here, and then you can just start selecting the specific transactions that you want to pay. So here I've got an invoice and a credit, for example. So I could tick the invoice, but I could also take up the credit at the same time. So now I've got a balance of $1.20, and then I might take another invoice. Let's say that one there, and so there's the total amount to be paid. Now, once you've selected the invoices to be paid and confirmed the amount that will be paid by the customer, then you need to go into the payment methods or the payment means. Now, there's a few ways of getting there. You can click on the money bag next to the amount here, and that'll open up the payment means. You could click on the money bag in the toolbar and get there as well. You could do a right click and then go into the payment means as well. And then finally, there's also a keyboard shortcut, or if you went to go to and payment means, so you got that option, but you can also use the keyboard shortcut Control Y to open up the payment means screen. Right, so actually 5 ways of getting there to the same screen. So here is the payment means screen. Now, once you get into this screen, then you've got to sort of specify which particular payment method or means was used by the customer to pay you. And the options you've got are check, and pardon the American spelling for check. I mean, in Australia it would be with a Q. And that depends on the language settings. I think I've probably got the American setting. And so you got checks, transfers, credit cards, and cash. They're the 4 options available. And so we'll quickly run through each one of those and see what's involved. So if you had selected check, then what happens is if a bank account was defined on the customer, then those details will already get pre-populated into the payment means. Of course, you do need to enter the check number. So if you physically received a check, and again, that's getting less and less common, but if you do receive a check, then you can type in the actual check number, confirm the PSB or the rest of the bank account details. Now, if you didn't have the customer's bank account details already saved in the system on the customer master, and let's just quickly check where it is. So on the customer master in the payment terms, you've got this section here called Business Partner Bank, and in here you can define multiple banks if you wanted to. In my case, I've only got one, and that's the one that's sort of pulled through when I went into the payment screen. So let's go back into the payment screen. We see those details now. If you did receive a different check from a different bank account, you can still go in and do it. But what will happen is if you typed in a number and if you try to tab out, it'll search and say, well, that particular bank account doesn't exist on the customer's master. It's going to block you. Now you can get past this by using the Control and Tab key. So instead of trying to tab out of the field, you go Control Tab, and it'll accept whatever information you've typed in both the branch and the account field. And then you can put in the check number and then the amount. Now, in terms of the amount, you can, of course, type it in, but you can also right-click on the field and say Copy Balance Due. Or there is a keyboard shortcut for this as well, which is Control B. If you type Control and B, B for Bravo, then whatever amount is on the overall transaction total, you get that. Now, if you had a split payment, if some amount was paid by check, some by cash or something, you can of course do that, and then in that case you'd have to have a different amount here. But in my case, let's say the customer is paying the full amount using this check, and so I click OK there, and then I can click on Add. Now let's quickly just check what the journal would look like when I process this. So because it's a check, it's going to go into some sort of a clearing account. So I've got a checks received clearing account that's been debited, and the customer gets credited. So I click Add. And so that's now processed that payment. Those, particular invoices or transactions will drop off the list of open transactions. And if I now went in to process another payment for the same customer, those particular transactions will no longer be there. So let's quickly run through the rest of the payment methods now. So let's just pick one invoice, go into the payment means. The next one here is a bank transfer. So in this case, you'd have to pick the GL account of the bank, whatever that may be. And you'd have to know the account in this case, put in a date, and again Control B for the balance, and then just click OK. And that would then process that as a incoming payment, and it'll debit the bank account immediately. So I'm not going to sort of take you through that whole process again. The next one there is credit card. So let's have a look at that one. So in this case, again, on the customer master record, I have got a definition that says they pay by MasterCard, and there is a card number. Note that SAP will encrypt the card details as soon as you type them in. So it's not visually, you cannot see it when you're looking at it on screen, and even in the database, it's encrypted, and this is due to PCI compliance. Now, if you really wanted to process a customer payment using a credit card, and you wanted to do a direct process through a payment gateway, then you'd have to consider using iPayments. This is an add-on from Voyam called iPayments that allows you to securely store customer credit card details. In fact, they're not stored within SAP database, but rather you get a token from the payment gateway that you store, and so whenever you need to take money from that particular customer, you just sort of use that token and then process the payment. So again, we've got a YouTube video on this. So if you went into our YouTube channel and search for iPayments, you can see how that particular process works. But in this case, because I did have something in the credit cards area on the master, when I go in here, it kind of brings that through. I do still need to type in, say, the validity. So if you were doing a manual process, at the minimum, you need to select the card type. That will bring through the GL account. You'd have to put some sort of a card number, and it could just put in a 4-digit number. You'd need to have a valid card. So so let's say the card expires at the end of this year, and then you need to put the amount due. Again, Control B will do the trick on this field. And then the last thing that's essential is the voucher number. So you need to put in something here. So this, if you processed a payment online, or if you've got a physical EFTPOS machine and you've processed the payment on the machine, whatever number comes out of that machine, you type that in here as a reference. And so then you process it. And then when you look at the journal entry now, you can see it's going into the MasterCard settlement account, because that's the clearing account we had defined for MasterCard payments, and then we can add that. So that finalizes a credit card payment. And then the last payment type we've got is the cash, so which is fairly straightforward. You go in, again, you pick the payment means, then you go into cash. It will default some sort of a cash clearing account, which is based on whatever GL determination you have. But of course, you can pick a different account. I mean, normally it'd be a petty cash account or something like that. And then again, put in the Control B for the amount, and then you click on add, and then that will create the payment. Once again, if you look at the journal, you'll see it's going to credit the clearing account and debit the clearing account and credit the customer. Now, for the payment methods, cash, credit card, and checks, you have to then go through that deposit step to take it out of those clearing accounts and put them into the bank, which we will look at shortly. Let's just look at some of the other things that are relevant here. So one of those is discounts. So if you're getting a discount, if the payment terms were such that discount was applicable, this would already be showing a discount. But otherwise, you can go in and type in saying, customer, or I'm giving the customer 5% discount on payment, right? And that'll then work backwards and work out a discount amount. Or you can say, I'm actually giving them a $10 discount, and then it'll work backwards and say, well, that's whatever that percentage may be. So it could work either way. So let's give them a 5% discount. So what happens then is when you do give a discount, and let's stick with a payment means of cash. When you look at the journal that gets created now, you'll see that it's posting that as an expense. So we had $148.50 as a discount. And what it's done is it's split that into the actual discount and the GST aspect. So if you're giving someone a discount on a payment, then there is a GST implication. And so the system will calculate that GST and post that as well for you, or GST or VAT, depending on the tax jurisdiction. And so you'll end up with that sort of a journal entry that takes care of the clearing account as well as the GST and the expense for giving a discount. And then you can process that as a payment. So the next one we're going to look at is if you do have a foreign currency account or foreign currency supplier and how you process payments for those. So if I pick here's a US dollar customer, and so systems brought through the exchange rate based on whatever data is in the exchange rate tables. So it came through with that, but of course you can go and change that exchange rate and say, no, actually the transaction, I'm getting a different exchange rate for my transaction today. So let's now pick the invoice that was being paid, or invoices that are paid. You can pick multiple. Of course, you can also part pay an invoice. So for whatever reason, we know that actually there's amount in dispute, but I've agreed to pay $500 on this invoice. I can go in and say I'm paying $500. Okay, so we can take 500. Based on the exchange rate, the system's calculating the Australian dollar amount. And then in here, you could have a couple of choices. You could have a US dollar or foreign currency bank account, and you could pay out of that. Or you can say, well, actually, I'm paying out of my Australian dollar or my local currency bank account. and then whatever the amount is. Now, if there is a mismatch between what you're paying and what the foreign currency translation is, then you need to then just adjust and play with the exchange rate to get to a match. Then put the amount in. Now, one of the things that could happen here is that you might end up with a bank charge. Let's say, we'll come back to the bank charge. Actually, let's just process this first. So we've got funnily enough, the customer is paying us cash, which is highly unlikely. It'd probably more likely be a bank transfer. So let's actually make that a bit more realistic. Let's go into the bank transfer, pick my bank account, put in the amounts, and put that through. And now if you look at the journal entry, you'll see it's processed the transaction both in US dollars as well as Australian dollars. It's credited the account or debited the account for the amounts we've paid. But because the exchange rate has moved between when the transaction happened and now, it's also posting a realized exchange gain. And so how did that come about? So let's look at the actual transaction. So we're using a 0.6676 as the exchange rate for this transaction. But when the actual invoice happened, the exchange rate was 0.7638. So the difference between the two is going into a realized exchange rate gain account, and it's crediting. And then depending on the movement of the exchange rate, it will either debit or credit that account. So we've done that, and we add the incoming payment. And because we've part paid it, if we now come back and pick the same customer, you'll see that that invoice is there, but now there's balance. It's got the original amount and the balance due. Okay, let's now look at bank charges. So for whatever reason, you're getting charged by the bank for the transaction. Let's go in. Let's go into the money bag. Let's say it's a bank transfer. And let's say there was a $25 bank charge. All right, so what happens then is SAP considers the bank charge as part of the overall. So, if the customer is paying you the full amount, the bank charge is part of that and is taken as an expense. It's not, it's not that you're going to charge the customer extra. If you need to charge the customer extra, you'll need to push through an invoice for that extra charge. There is no way of having an amount that's paying more than the overall balance and then taking that as a bank charge. The SAP doesn't allow that. So what's happened here? Let's go in and let's put in my bank account. Let's put in the bank charge. And let's put in the amount we're receiving into our account. So the customer's paying us the full amount, but the bank is taking $25 as a charge in this case. And so when we look at the journal entry, you'll see that there is a bank charge amount. So we're getting the full amount, even though the customer's account is getting credited for the full amount. So once again, as I was saying, that if you are charging the customer over and above their balance, then you'd need to push through a separate transaction for that. Currently, SAP Business One doesn't allow for that scenario. And then we can post this. And so a couple other things as far as processing of payments concerned, one is payment on account. So if the customer is paying you something and it's a balance that they haven't told you which invoices they're paying, then you just take it in as a payment on account. And then so that'll just sit on the account as an unreconciled payment. And then later, when you go to your reconciliation of the customer's account, you can apply those payments. So if I did this and put it in bank account, put the amount in and process it. If I then look at the customer's balance, I'll see that as a balance sitting as unreconciled, and then you can go to your internal reconciliation, and from here sort of select which invoices were allocated to that particular invoice or particular payment, and then finalize it like that. Okay, and then the other one here is the option to say add in sequence. So let's have a look at that one. So if I pick a customer, and then let's say we know the amount they're paying, and they say just apply it to the oldest payments or the oldest invoices first. So they don't want to tell you that. They just they just say apply it as you feel fit. So let's say they paid us $20,000. So I go 20,000, and then what I do is I click on this button that says add in sequence, and it kind of goes through and checks all the invoices from oldest, and if it will also part apply some of them, right? So the last invoice, if it doesn't sort of match cent to cent, then on the last invoice you have part payment. So that's your add in sequence button. And then the final thing here is in terms of incoming payments. Of course, you can take payments from customers, but you can also take payments from suppliers. So for any reason where the supplier you have a credit with the supplier and you're not going to do any further business and they're going to refund you some money, well, you can process an incoming payment against the supplier, select the credit that they're clearing. I can find a credit, maybe I don't have any here, but yeah, you just pick a credit and finalize it like that. Or you could have an incoming payment against a GL account. So maybe you've got some sort of a miscellaneous revenue. There wasn't a customer, you've got some money. There may be GST or VAT, there may not be. Then you put in the amount, and then you go in and once again just pick the payment methods. And if you then look at the journal entry preview, you'll see, debit on the account, on the bank account, credit the revenue or the whatever the P&L account you chose, and then there's the GST or VAT if applicable. This generally is used for that. It's also used if you're transferring money from one bank account to another. You could use this transaction rather than a journal entry. Okay, that covers your incoming payment side of things. Well, the outgoing payment is exactly the same. It's just the reverse. You open up the outgoing payment screen, it looks exactly the same. You pick a supplier, you then go in, select the invoices being paid, go into your money bag, and then you've got the same, except you've got a bit more the bank transfer and the cash is exactly the same. There is no difference. So what I'll do is I'll touch on the other ones, which is your credit card. So in here you can then say which credit card it is. Then you go pick your credit card clearing account. So this is, you've got, maybe you've got a number of different credit cards for staff, or you've got a corporate credit card and you have some sort of a clearing account for that. You pick that particular clearing account. Let's see if I got one. you know, imagine that this was your credit card, and then you just go in and put in the amount and then process that as a payment like so. And then so when you do the journal entry, you'll see that it's gone into whatever that credit card clearing is, and then you'd reconcile that credit card as a normal bank account. So that's for credit cards. And then for checks, there is a whole process around, you know, using checks and printing checks and so on, which we will, you know, sort of cover in a greater detail later in this session. So I'll leave that till then. The other thing that we should look at is the payment block. So if you remember, on the invoices, you can have a payment block. So when you pick the customer, there is a column here that shows you if that invoice is blocked for payment. In this case, it is. Now, what the system will do is if you attempt to pay this, it will not stop you. But when you do process the payment, and when you try to add, it actually warns you that one of the selected documents are blocked for payment, and you can still choose to continue. Okay, so that's your outgoing payments. Let's now look at the process of depositing funds into the bank from monies received, and this is for your cash, credit card, and checks. So deposit, and so you've got 3 tabs going across. First one's for checks, second one's for credit cards, third one's for cash. So with checks, you also have the ability to display the clearing account. So if you've got multiple clearing accounts, maybe you've got different branches and, you know, checks being received in different branches, then you might have different ones on this list. And then you go pick the checks being deposited, which bank account you're depositing the checks into, and then you essentially add that. And what happens then is you've sort of recorded the fact that you're depositing this, and then you can print out a deposit slip that you can take with yourself to the bank and then complete the depositing. So that's for your checks deposit. Similar thing with your credit cards. So, you know, at the end of the day, you probably either receive, if it's online transactions, you'll receive some sort of a clearing document or list of transactions that were received, and you match those against this, and then you sort of tick off and say, yes, if the bank has paid us for these credit card transactions and the money is in the bank. So again, you pick the transactions that have been paid, you pick the account to which the money has been transferred to, and then, you know, it's the same thing. You add that, and you do also need to have the post-dated transaction there, and then it basically takes it out of the clearing account and moves it into your bank account. Okay, and then the final one is your cash deposits. Fairly straightforward. Which bank account is it going to, and how much you're paying out of your clearing account, and that's it. So that's to deposit cash. Okay, let's look at the checks processes now. So we go into outgoing payment, and if you recall that we had on the on our house bank account definition, we had defined the next check number. So banking, house bank accounts, and there was the next check account, 983. So let's do an outgoing payment. Let's pick the invoice being paid, and then we'll go in and do a check. And so it's picked up my bank account, And if I've got another bank account, I can select that as well. And then I've got two options here. I can say I'm writing a check. I've got a manual book in front of me, and I'm just going to type in the check number, right? So if you've got a checkbook and you're not doing check printing, you're not doing checks too often, then that's the process you do. However, if you're doing a bulk check run, you might have run payment visit run and you've generated a number of check payments, then what would happen is you'd have this scenario where the check number is not allocated until you do the check printing. So I can go there, assign the number, and I essentially add. So at this stage, the check number hasn't been allocated. I can go in and look at this. I can see check number is still 0. What then happens is you go into this section called outgoing payments, check for payments. So this has generated this transaction called a checks for payment for the amount. You can see still check number 0. If I went and did the printing now, let me just preview this first. So this is the check layout, which has got some sort of a remittance up the top and then the actual check. And then, again, this can be designed. But when you print this, it kind of says to you, please ensure that you have the check number in the printer, and then click OK. So you've got to then go into the printer, put the check number leaf in, click OK, and then select and print out. And once you've done the printing, it sort of says to you, can you confirm whether the check printed successfully or not? Right, so you can either confirm it, you can say it was damaged, you can say it wasn't printed, because if you say damaged, then that check number is voided. If you say not printed, then of course it hasn't come out yet, and you can still use the same number, and same with unconfirmed. Or if it's worked, then you say confirmed, and then that number 983 will be allocated to that transaction. So if we refresh this, you can see now it's got the number 983. If I go into my outgoing payment, go into the money bags, I can see the number 983. Now this is doing it one at a time, but if you've got a bunch of checks that need to be paid, or you've done a payment run, you can go into your document printing and say you want to print all your checks, and then one set up to be printed. Then, well, actually I don't have any, so let me just quickly post a couple of them. So let's do that one. Let's do $100 on that one, and we do it as a check. And let's do another one. Let's do $200 on that one, and let's put the amount in. So now I've got 2 checks that need printing. I can go into my document printing. I can pick the bank account, and then I get a list. And then from here, I can go say print. Right, it's telling me the number is ticked over, 984. You want to continue? Yes. And I'm printing those 2 checks. And then it's asking me to confirm whether those have been printed successfully. I can go and sort of do that, confirm all of those in bulk, and we're done now. So that's the process by which you manage the check stock within Business One. Now, for whatever reason, there was a problem, the check didn't, had a problem after you've confirmed it, you can still go back in and just sort of void the check. So, void checks for payment. You can go into the list and we can say that one there was a problem. I'm voiding it. Right, and then it'll cancel it, cancel the payment, and then you can go back in and do some further processing. Okay. All right. So then the final topic of the day is the payment visit. So this is so you can obviously do one outgoing payment at a time. Manually select a supplier and make a payment, or you can use SAP Business One to make recommendations based on criteria using the payment visit. So payment visit as a visit, so there's multiple steps. So we start a new one. And so it's the date. What are we doing? So if you were doing check runs, you could do checks, or you do bank transfers. And then, so you go into the next, you select the suppliers you want to add for this payment. So you can do it by supplier group, you can do it by some sort of other criteria, including properties, and you go add to list. That adds all the suppliers that have a balance. You also got the expanded selection criteria, so you can use a UDF or some other criteria on the BP master as a selection. So next there, and the most important thing here is the due date, right? What invoices do you want to pay? When are they due till? So you pick whatever the due date you want to do. So if you wanted to do only at the start of this month, then you can say only invoices due up till that date. Go next, select the bank accounts you want to pay out of. Then in here, the important thing is the max outgoing payment. So if you have a positive balance in the bank, that's the amount that comes through. If you have a negative balance or overdraft, then you need to go in and say, what's the max amount you want to pay? I'm saying 200,000. Then I get a list of invoices or suppliers that need to be paid. If I click on expand all, I see all those invoices that have been selected as part of this. And if I then see, well, why isn't a certain invoice or why isn't a certain supplier missing? You remember we made one of the suppliers on a payment block. You can go into this thing called the non-included transactions, and it'll show you. The business partner selected is blocked for payment runs, Lasercom. So we can't pay Lasercom because they're on a block. And then you've got a scenario where the max amount is greater than amount permitted in this payment run. So we selected 200,000. These things aren't getting paid because it's exceeding. Here's an invoice that's not being paid because it's blocked for payment runs. So you'll see the various reasons why something's not getting on the list. And then from here, you can still select and decide which invoices should be paid. So let's say I just want to pay those two invoices from Maxitech in that invoice, and the rest I don't want to pay. Right, so I'm just paying two suppliers. I can also add a manual row. So if there's a supplier I want to prepay something, or as a customer I want to refund some money, I could go in and manually add that in here. And I go next, and then I've got a few options. I can either save the selection criteria, which means that I can come back and rerun this, and then it might look a bit different because transactions have moved. Or I could save the recommendations. If I do that, then all the invoices that I've checked off are now saved in this particular payment run. And if I created a second payment run, those invoices will not appear in that run. Or I could execute a payment order run. Now, what's a payment order run? It allows us to create the bank file before creating the actual outgoing payment in SAP. Why would you want to do that? Well, it's probably because you've executed, you want to make sure that you successfully upload the file to the bank, it's accepted it, and then you run the actual payment in SAP to try and sort of make sure the two systems are aligned. Or you could just execute the payment run. That would create the payment in SAP. And then from there, you can sort of complete. So let me just save recommendations, which isn't too different from just executing a payment order run. So if I did that, so recommendations, I haven't paid anything, right? All it's done is save the recommendations. I can then come back and I can load, and there's that one that's sitting on recommended. If I had made a payment order, then it'd be sitting as a status of payment order. I can also go look at the old previous ones that have been executed, right? So that's also possible. Why would you do that? Because you've generated, you had a problem generating the bank files. You need to come back in, rerun this, review this, and generate the bank file. But here in this case, I'm just going to pick the recommend date, and I could just go to the final step now. View what was selected. Remember, if something's been selected in this, it will not appear in a subsequent payment run unless you cancel this payment run, right? So you'd need to cancel this payment run if you needed to do that. And then I could just execute the payment run. And saying payment visits successful, 2 payments were created. From here, you could go print your remittances if you wanted to. You can view all the other details, what was paid, what the amounts were, what the totals were, which bank account, which supplier, all those things are available here. And then you can also generate the bank file if it's set up, if your suppliers are set up correctly, if you've got the payment, if you've got the banking side of it set up correctly, then you can do that, and then you're done.